Right, for those of you who don't know me, I'm McKenzie from the policy group at MSD. Part of our role is to provide advice on New Zealand superannuation and the wider social security system. So it's really nice to be invited to come along here today, so Claire, Susan, thank you. And hopefully what I've got to say will be of interest. What I'm going to do is really just talk a little bit about the current 65 plus population in New Zealand, and then identify, I've got three emerging trends I'm going to talk about. Obviously there's a lot more, but in the time available, three is it. Also want to take a slightly closer look at the population aged 50 to 64, who are the next group of superannuitants, and I think there's some quite interesting trends happening amongst that population which are pointers towards what our older population might look like in the future. Right. So currently, older New Zealanders are doing relatively well. We have pretty low rates of income poverty amongst the 65 plus group, high rates of home ownership, significant growing economic contribution of people 65 and over as well. I mean, as we mentioned before, more people are staying in work post-pension age. Older people also contribute to the economy in a lot of other ways through voluntary work and as taxpayers and consumers. So they're also the wealthiest group in New Zealand. I think about a third of household net worth is held by 65 plus households. And home ownership amongst this group, as I said, was high. It peaks in the 70 to 74 age group at around 77%. Okay, whoops. This is from Brian Perry's Household Incomes Report, which MSD publishes every year. From that you can see that relative to the complete population, the 65 plus population are doing pretty well. This is after housing costs income, so as you can see, yeah, it's about 5% currently of older people are in what we would term either low income or income poverty, compared with obviously a much higher rate amongst the general population. And you can see what happened in the early 1990s there as well, driven by a lot of things, but benefits, social security benefits were cut in the early 1990s. Superannuation wasn't, but it was frozen for a couple of years. So superannuitants did better than the rest of the beneficiary population at that time. Also, when we look at non-income measures, older New Zealanders do relatively well, similar sort of story. Right, this is a bit of an international comparison. Compares New Zealand with the EU. When the EU was putting together a survey in 2009, we were able to take a lot of their questions and put them into our 2008 Living Standards survey, so we were able to do a direct comparison. Just to give you an idea, some of the questions that people were asked, it's do you have a meal with meat, fish or chicken every second day? Do you keep the home warm? Do you have access to a car? Do you avoid arrears in your mortgage, rent and other bills? Do you have at least 1 week's holiday a year? And what's your ability to face unexpected bills or expenses? So as you can see, I mean, New Zealand does pretty well. When you look at the situation where 7 or more of those questions were answered in the negative, New Zealand does very well. In fact, we're at the top there. Some of the countries down this end here, Portugal, Greece, Estonia, Slovenia, not so good if you're in that age group. I'll just run through this very quickly because you guys probably all know most of this. I think there's 2 points here. New Zealand superannuation is quite unique when compared to other countries. And I think we often have delegations that come to New Zealand and we go and talk to them about our pensions and social security system, and it's quite interesting seeing the reaction when they suddenly realise that, oh, we pay it to everyone and you don't have to be retired and there's no income test or means test. I think another key point also to make is that New Zealand superannuation is a key component of our social security system. It has been since national superannuation was introduced in 1977. So it's administered as a social security benefit, it's defined as a social security benefit, which means a lot of the rules and administrative processes that apply to benefits also apply to New Zealand Super. So, for example, New Zealand Super is not an individual entitlement. A lot of people think it is, including the last report on retirement incomes, I think, made a statement that it was an individual entitlement. It's not. It's the same as a social security benefit. So the unit of entitlement is what we call the core family, which is either a single person or a couple. But clearly for New Zealand Super, because it's not income or asset tested, compared with most other benefits which are, the actual impact of the unit of entitlement is different. But there are a couple of situations where for New Zealand Super, the couple does matter. And if you include a non-qualified partner in New Zealand Super, then you're income tested, and it's the income of both partners that is tested. Similarly, as Claire mentioned, direct deduction of overseas government-administered pensions. Again, if your partner has a overseas government-administered pension, it can affect your own New Zealand superannuation. And around 90,000 people are affected by the direct deduction policy across the whole social security system, but most of them are superannuitants. And the revenue generated from that policy is around 390 million a year. Okay, just some quick numbers. Stating the obvious, yeah, the numbers are rising quite rapidly. Veterans pension, for those of you who are not familiar, is simply a version of New Zealand Super that is available to veterans who have served overseas in a war or an emergency. So those numbers are dropping. That's primarily as a result of the last of the World War II veterans dying off. But in the future we may see those numbers rise again because of more recent deployments overseas in places like Timor, Afghanistan. So these veterans pensions paid at the same rate as New Zealand Super. There's some extra benefits that go with it for veterans, but it's pretty much the same thing. And just on cost, yeah, the cost for this financial year is about 14.5 billion, but that's before tax. So you take tax off, that takes about 2 billion off it. So New Zealand Super is taxable income, so the Crown retains about 14% of the gross expenditure. And just at the bottom there, 95% of people over 65 receive New Zealand Super, veterans pension, or another social security benefit. The 5% that don't are probably people who have large overseas government-administered pensions, which would be more than the amount of super they would be entitled to. And there'll be some people there that just choose not to receive it. They don't want it, they don't need it. Rates, as I mentioned, the rate structure for New Zealand Super is based on living circumstances. It's not related to previous earnings or anything like that. So it reflects in the main the social security system where we pay different rates for married people, a couple, and single people. Just some quick comparisons down the bottom there. The average ordinary time weekly wage, a couple who both qualify receive 66% of the average wage after tax. So that means your replacement rates in general for all superannuitants are around the 40% mark. Okay. This again is from Brian Perry's Household Incomes Report, and it's just showing us that really, for older people in New Zealand superannuation is a very important source of income, particularly as you'd expect amongst those who are renters. Sorry, just a bit ahead of myself here. The other point I just wanted to make was income inequality is actually increasing amongst the 65 plus group. And that's primarily driven by increasing rates of employment, so amongst the 65 to 75 group. So it might be alarming for some, but there's a clear explanation for it, and maybe it's not a bad thing. More recently, the winter energy payment was introduced last year. This provides additional support to superannuitants and anyone receiving a social security benefit during the winter months. It's effectively a cash payment of $450 for single people and $700 for a couple. So it's paid with the regular instalments of the benefit or pension. And people can opt out. Last year, amongst the superannuation population, 2,200 people actually contacted us and opted out. So not many. Sorry?
Could we have their names and addresses?
Which I actually thought was interesting because these are people who opted in to receive super in the first place. They just chose not to receive super. They've now opted out. Yes, exactly. So that adds to the pension bill about $450 million a year.
Alex, what do two people sharing get?
If they're single, they get $450 each.
900 if they're living together.
If they're not a couple,
If they're not a couple.
They're not sleeping together.
No.
So once again.
and again, there's no difference if they're sharing or if they're single living alone. It's $450. Right, okay, the first trend I want to cover very quickly, declining rates of mortgage-free home ownership. We've talked about this, come up in various sessions today already, but I think it's fair to say fewer people are reaching 65 with a mortgage-free home. And as a result of that, they face higher weekly housing costs. There I've just noted a couple of things that could potentially mitigate this issue. Over the life course, if people are saving into KiwiSaver or other ways of accumulating assets other than housing, then maybe it's not so bad, they've got assets in retirement. Also, an increasing proportion of older people in paid employment. I mean, that's higher income they can pay, they have higher weekly housing costs, but at some point that's probably going to end. And the other thing is really, are the people who are remaining in paid employment beyond 65 the ones that actually need the money? So we've talked, people mentioned manual workers who can't work beyond 65 or even 60 or 55 for some of them. They might be the ones that actually don't have a mortgage-free home and need that income. Whereas, your white-collar workers like me, I mean, I can sit in front of my computer probably quite happily for a few years beyond pension age if I want to. And there's just some stats, and you can see that really the decline is occurring amongst that sort of 30 to 54 age group. And I mean, what I think it's fair to say is it's not necessarily true that this decline sort of here will flow through to here. I mean, people might just be getting into home ownership later. For example, potentially people could be drawing down their KiwiSaver at 65 and buying a house. Could be their first home. Or, they could be receiving significant inheritances when they're in their early 60s, and which gets them into their first home. So, to say that this will carry through in this magnitude to people, in their 60s and beyond in the future is by no means certain. So, there's a lot of factors at play. This is from Brian Perry's Household Incomes Report. It just really shows you some nice trends amongst the 65 plus population. Sort of a gradual decline in mortgage-free, increase in those with a home with a mortgage, increase in renting. And obviously if you extrapolate that out, you'll get a situation that is somewhat concerning. But again, we know what we know now, we don't know so much about what's going to happen in the next 20, 30 years. The second trend I just wanted to cover again quickly, changing labour force patterns. I mean, as you probably know, New Zealand doesn't have a compulsory retirement age, unless you're a High Court judge or something like that. And we have anti-age discrimination, so really people who want to work beyond pension age are welcome to, and there's obviously no income or asset test, so no financial disincentive to work beyond pension age. As you can see in the second dot point there, labour force participation amongst the 65 plus group has increased quite rapidly since the 1990s, just under 24% now. But that doesn't mean that these people are working, 40, 50 hours a week. This is just, they're in some paid work. And again, a couple of questions I just raised at the bottom there. What we don't know a lot about is why people are working beyond 65. Are they choosing to, or do they have to? As we talked about with the housing, if you're paying rent or still paying a mortgage, you probably have to work beyond 65. And again, labour force participation rates, particularly in late 50s, 60s, are much lower for women, so potentially scope for further increases in labour force participation there. And again, just the group who's missing out here are the older people who can't work. So people with a health or a disability, a health issue or a disability, people who've been done manual work all their life and their body's just not up to it anymore, they're the ones that actually have no choice. They can't work. And if they're the people that are renting or still paying a mortgage, then that's a problem. Just a very quick diagram of the labour market for older people. The only comment I'd make there is the numbers around unemployment are probably not really worth giving much focus to. I mean, when people are asked in a survey if they're unemployed and they're over 65, if they were unemployed, a lot of them will just say they're retired. So I wouldn't read too much into that figure, 2,200. Third area I just wanted to cover is increasing use of supplementary benefits. And we are seeing quite a significant increase, both numerically as we'd expect with the ageing population, but also proportionally. So the first one here is the accommodation supplement. Currently around just over 5% of superannuitants are also receiving the accommodation supplement, up from 3.6% 15 years ago. That means these are people who have high housing costs, they have minimal cash assets, and minimal other income. So that's a group which we're particularly interested in. In addition to that, you've got people in public housing, 14,000 superannuitants in public housing receiving an income-related rent subsidy. They pay even less for their housing costs because of the subsidy. Interesting, proportion receiving disability allowance is actually falling. There's potentially a number of reasons for that. I mean, the group turning 65 are healthier than previous cohorts. Potentially those working, particularly when there's a couple and one has a disability, if the other partner's working, they probably don't qualify because the disability allowance is income tested. So I guess it'll be interesting to see what happens as the baby boom population ages and gets into the 80 plus bracket, whether we see a big uptake in disability allowance. Right, I'm running out of time, so it's going fast. Very quickly, that's the current state. And it's one there, person to receive one or more supplementary benefits. The next group of superannuitants, older working age people, from 45 to 64 years. 64 years, they have very high rates of income poverty. So again, the focus on single older people. And again, I've just looked there at our administrative data, people receiving benefits. So there's 135,000 people there either receiving a benefit or a supplementary benefit. That's around 15% of the population aged 50 to 64. And the number's actually probably higher because our benefit records are just individual benefit records, so some of them will be a couple with another person in there as well. So at least 15% of that population group are MSD clients. Don't worry about that. Debt, I think, is an interesting one. We've got 56,000 current beneficiaries in that 50 to 64 group who owe us a lot of money. And that's just what they owe MSD. Who knows what they owe other agencies or the private sector. So debt is a growing issue. I'll skip through that. Quickly concluding remarks. I think what we are saying is the trends point to a future where there's going to be higher rates of income poverty amongst older people than there are now. And a growing number of vulnerable older people. Housing is a key driver. Obviously, those who don't have a mortgage-free home are going to find it much harder. And again, the point I made about, many people will need to work beyond pension age, but some of them won't be able to. Quickly, Just a quick point on KiwiSaver. The mechanism for KiwiSaver, in my view, is excellent, but its impact on future retirement incomes is actually unknown at this point. And those that will really need it are probably not saving now. And one of the trends with KiwiSaver that we're seeing is withdrawals for financial hardship are growing quite rapidly. About 100 million was taken out of it last year due to significant financial hardship. 17,000 people took their money out. And my time's up. Thank you.